Awesome. Well, excited to continue this conversation. It's been a great day so far. We have two very special guests. Now I'll let one of you guys kind of get going here. Whoever wants to start.
Claudia,
Thank you. Sure, thanks. Well, I'll start with a little quick introduction of GoldenTree and who GoldenTree is as a firm before I dive into the strategy. So GoldenTree was founded in 2000, so we're in our 24th year. It was founded by Steve Tannenbaum. Steve had previously been at Mackay Shields, and at Mackay he ran their high yield mainstay fund. And the investment process that he developed there, he brought over to GoldenTree, and obviously we've continued to refine it and expand upon it, but Steve's essentially been investing this way for well over 30 years. The firm overall focuses on credit. Everything we do is oriented towards credit, but everything from high yield bonds, broadly syndicated loans, private credit, distressed credit, structured products, and even emerging market debt sometimes. So it's a really broad mandate with respect to credit. But what we look for within the world of credit is credit that has a catalyst to drive value, right? So sometimes in some forms of credit investing, you often find people who, we use a certain amount of leverage to drive returns. If you have a plain vanilla strategy with really low yields, you lever that up and you get returns. That's very different from the approach that we use. We really look for credits that are mispriced, that are cheap, and that have a catalyst to get them to what we think is a fair value. So a bond trading at 80 that we think is worth par, and the company's going to restructure or refinance or issue equity or do something to drive that 80 to par. That's the type of investment that we look for. So we have really deep fundamental research. Our investment team is the largest part of the investment team is our industry specialist team, about 33 industry specialists, and their job is to find those kinds of opportunities, to analyze companies from the bottom up, do the research, find whatever part of the capital structure is mispriced, whether it's the bond, the loan. You could also do something in the world of private credit, or if it's not performing, if it's a distressed situation, same type of situation, and find that fundamental mispricing and find the catalyst that will drive that value. So that's really what we look for as a firm across the board, as we focus on credit, mispriced credit with a catalyst to drive value, and really across the board in the world of types of credit.